Imagine this. You've worked hard, saved up $100,000, and now you're ready to invest. But then boom. You're hit with a massive decision. Do you go with ETFs, or do you stick with mutual funds? Here's the kicker. The wrong choice could cost you tens of thousands of dollars over the years. Yep, you heard that right, tens of thousands. Today, I'm going to break it all down. No fluff, no confusing jargon, just the facts you need to know. And, spoiler alert, most financial advisors won't tell you what I'm about to reveal. Alright, let's start with the basics. ETFs and mutual funds are like two heavyweights in the investment world. They both let you invest in a basket of stocks or bonds, which is great for diversifying your portfolio. But the way they operate? Night and day. ETFs, or exchange-traded funds, are like the cool, low-maintenance cousin. They trade on the stock market, meaning you can buy and sell them throughout the day. It's fast, it's flexible, it's slick. Mutual funds, on the other hand, are the classic, dependable type. You buy or sell them at the end of the trading day. They've got that old school, set it and forget it vibe. Sounds simple enough, right? Well, buckle up, because the devil is in the details. Let's talk about fees. This is where the gloves really come off. Mutual funds typically have higher expense ratios. Why? Because you're paying for active management, someone's actually picking stocks for you. Sounds good, until you realize the average expense ratio is about 1%. For $100,000 invested, that's $1,000 a year, every year. Now, ETFs? They laugh in the face of those fees. With many ETFs, you're looking at expense ratios as low as 0.03%. On $100,000? That's just $30 a year. $30 versus $1,000. Do the math, it's not even close. Let's get real about taxes. Did you know mutual funds can hit you with a tax bill even if you didn't sell a single share? Yep, that's because of something called capital gains distributions. Basically, if the fund manager sells stocks within the fund, you might owe taxes. ETFs, on the other hand, are tax-efficient ninjas. They use something called in-kind transfers to avoid triggering taxes. Translation: more money stays in your pocket. Taxes aren't just boring, they're expensive. And ETFs? They're winning this round by a mile. Here's a big myth: active management is always better. Mutual funds have fund managers who actively pick stocks, trying to beat the market. Sounds great, right? Except studies show that the majority of active funds fail to outperform index funds over the long term. ETFs, which are often passively managed, just follow the market. And guess what? They often perform better because they're not weighed down by high fees or emotional stock picking. Why pay more for worse results? It's like paying for a first-class ticket and ending up in coach. Let's talk lifestyle. If you're someone who likes flexibility, ETFs are your jam. Want to buy or sell at 10 a.m.? Go for it. Mutual funds? You'll need to wait until the end of the day. But here's the catch: too much flexibility can lead to overtrading, which can wreck your returns. Mutual funds force you to chill, which might be better for long-term investors. Think of it like dating. ETFs are the fast, fun option, but mutual funds? They're more like the steady partner who keeps you grounded. Alright, so which is better if you're dropping $100,000? Here's the truth: it depends on you. If you want low fees, tax efficiency, and flexibility, ETFs are the clear winner. But if you value professional management and don't mind paying for it, mutual funds might be worth considering. But here's my hot take: for most people, ETFs are the better deal. They're cheaper, more tax efficient, and just as effective for building wealth. Mutual funds? They're like Blockbuster in a Netflix world, still around, but losing relevance fast. So, there you have it. ETFs and mutual funds each have their strengths, but the choice comes down to your goals and style. Now, I want to hear from you. Which one are you leaning toward, and why? Drop your thoughts in the comments below, I read every single one. And if you found this video helpful, smash that like button and hit subscribe so you never miss more no-nonsense money advice. Oh, and don't forget to share this with someone who's still stuck in the mutual fund versus ETF debate. Let's settle it once and for all.